You don't learn that much when things are going great. You learn everything when things are in a drawdown and things are not working, short time. And that's when I've always looked to really double down on research and looked for ways to fix whatever that was.
Sitting down today with John Bannan. I was really looking forward to talk about trading with you, John, about your experiences in the past. You have a whole lot of background to discuss for sure. Welcome on the podcast. Good to have you here and looking forward to talk trading with you.
Thank you for having me.
I don't know what to begin, but tell me about kind of how did you come across trading in the first place?
Well, I've always had an interest in the financial markets from when I was a pretty young guy. There was a TV show called Capital City when I was about 15, and I was fascinated by that. It was based on the London Stock Exchange. But I didn't really get into it until I was, just about 30 years old. I did have that interest, but my career and my goals, so it took me elsewhere until I eventually met a girl in London, London, England, and she was from Canada, and I had to move to Canada because we had the choice: we stay in London or we move to Canada, and she had her own business, and I had to sort of give up my career. I was working as a market analyst at the time, and I decided to move to Canada. Because when you move countries, you can't just go in straight to a job, right? Especially when the other person's, she had her own business. So I gave up my job and I moved to Canada, and I started looking around. What can I do while I'm waiting to get my paperwork sorted out, and that took a couple of years. So I started looking into investing books, and I came across a guy called Phil Town. It was more of a sort of Warren Buffett style long-term investing. I thought, well, that looks interesting. I can get into that because I have an interest in it. So slowly but surely got into it, and then got more and more into it, and then decided that as the years passed by, that long-term investing really wasn't for me, because I was more interested in the fascination of predicting the market, or building a system around taking money out of the market, and get more and more fell into the trading bucket basically. And I've never come out of that. And I've been full-time at this since 2009 now, so I've done nothing else but this.
How was your learning curve as a intraday trader? Was it hard going from investing to going to trading to actually make it work?
Yeah, well, I still mainly focus on daily charts, to be honest. I do have some intraday strategies. I've built lots of them over the years. Some have done well, some have failed, as you know how it goes, right? As you retool and retool. But my interest is still in picking out multi-day trends in the markets. That's sort of what I've focused on. That's what I found is because intraday stuff is very difficult from the point of view of having your average win has got to be a certain amount, otherwise slippage and all the rest will take it away. So I like the sort of longer term stuff, and that's sort of where I landed. So I started focusing on that and found other traders that were doing something similar, learned from them, went to this course, that course, traveled a few different places, and learned from some good people and some people who weren't so good, and picked the bones out of some of the stuff that they were doing. And I just started developing my own system, and that's where I started. So I think you kind of have to do this for yourself in terms of building a system, and that's sort of what I felt I had to do rather than just following someone else.
When did you understand that trading was the thing you wanted to do, and you had like no other choice than doing anything else?
Yeah, I think it's like everything. Sometimes just something really hits you, right? This is what I got to do. Right, and that was about 2006 for me. I just, I needed to do this, and I needed to get good at it because it's not something you can just do, half-assed. You got to go all in on this, right? And you got to just live and breathe this, because it is not forgiving if you don't do that. So it was about that time that I started reading as many books as I possibly could. I went to my last training course run by someone else in 2011, but between that 2006, 2011, I was really learning a lot from lots of different people.
What happened from then forward, from 2011 and beyond? What did you kind of decide to do with trading?
I was doing well for myself from the system I built in 2009 until 2011, and then I decided that I wanted to share it with other people, so I'd share it with friends and family and stuff. But I wanted to start a signal service, And that's what I did. I ran a signal service from 2011 until 2020, and that was called howdoitradestocks.com. And so, I had, hundreds of people following me. I ran training courses. I ran about, 30 different training courses, and I used to share my system with people. I'd give them on their laptop, and they could go away with it, or they could just choose to follow me, and I'd do the work for them. And that's what I basically ended up doing for quite some time. And that was an interesting journey, because when you start trading with other people, not necessarily for other people, but sharing what you're doing with other people, it really has to be the real deal. It has to work. Otherwise, you look like an idiot, right? So no one wants to look like an idiot. So that's for me, that was a really interesting pressure moment for me. Like when you're forced to really prove to yourself and prove to other people that it works, and a walk forward basis, as well as looking at back tests and stuff. So that made me better, because I just wanted to keep working on it, keep improving it, and that's continued to this day. In terms of, there was one other thing that sort of jumped in there in my head was around 2013, I met a chap that had been trading for about 50 years, and we were doing some deal with him where we were going to be investing in a brokerage, and he was bringing this particular trading system. And again, he had much more experience than me, and his trading system looked terrific. But he was a kind of eccentric guy, and he was really into more esoteric stuff, right? Cycles and WD GAN stuff. And I was, not really interested in that at the time. But he made this sort of throwaway comment that, sometimes the market can be predicted to the pip to the penny. And I was just like, what? Right? Normally you're thinking, well, there's indicators for this, that, and the next thing, and it's all mathematical models. Well, he's talking about not using technical analysis per se, but actually predicting turns, and then going beyond that and predicting to the pip to the penny. And again, there's lots of people that have tried to do this over the years. W.D. Gann, Louise McWhirter in 1938, she came out with a book. There's been lots of different people, Bradley Cowan more recently. But so I've sort of fallen down that rabbit hole too, in terms of not just building a trading system, but actually looking into, is it possible to predict turns in the market through repeating cycles? So I've sort of married both of those together for myself. But I've been working on that since about 2013.
People are going to want to know what's your trading style these days. So how would you kind of explain what you look for in the market?
I mean, I've built a lot of different systems, but I like the long only style. I keep coming back to long only because I like trading the indexes. I like trading the NASDAQ and the S&P. That's really what I've focused on. I started off trading stocks, and then, what I didn't like about trading stocks, stocks you can make a lot of money at, obviously, and lots of people do. But one of the downsides to stocks is you're always going to pick a dog or two. And if you're an investor, you can wake up in the morning and, it might not necessarily be particularly bad news for the company, but maybe the CEO sold some stock, and suddenly, everyone's freaking out because it turns out the guy just wants to build a pool in his backyard or something, right? But, this stock crashes the next morning, and it usually happens overnight, so, or bad earnings or whatever, and suddenly you're down 30% in that stock. So I didn't like that aspect about stocks, so then I moved to ETFs, right, and index ETFs in particular, and then went into more of the futures side as I get more serious about the trading itself. So I live in the futures world, where I trade the S&P and the NASDAQ, and I'm looking for multi-day trends in those, basically, where I'm holding it for a few days and then getting out. My average hold over the long term is about 3 days, 3 to 5 days. So that's sort of what I'm looking to pull out chunks of the trend as it goes forward. And what I've found when it comes to system building is the longs. The market's got a long bias, obviously. So when you're building systems, it is actually easier to build a long-only system than a long-short or a short-only system. Because shorts, as the saying goes, the bull walks up the stairs, but the bear jumps out the window, right? So, it's harder to catch the shorts. So that's my trading style, basically, in a nutshell.
How do you filter out for the times where you should be going long and the times where you should maybe just step away or not be taking any trades?
Well, I mean, there's a couple of things you can look at. Obviously, there's indicators themselves. I mean, I built I built a system that really tries to set out when the market's going down, and that is simple, like using something like a moving average, which is not particularly useful as a tool on its own, but it's pretty good for trends. Especially when you've got, take 2022 for example. It's fairly obvious it was in a downtrend, pockets of time in that year. So, and I've got something else that I call the bear market filter, which has triggered a few times over the years. It takes quite a bit of downside to trigger that, but that's when it's like, whoa, right, hands off for a little while, and wait for it to turn around a little bit, and a little bit more strength before you're able to get back in. So I can go through pockets of time where I'm not trading for a month and waiting for something to turn because it's just too dangerous.
You mentioned a few moments ago about the signal service you were running and the pressure that brought to you as a trader. How did you sort of deal or handle that kind of pressure that you had?
It's actually a really, really positive thing because it drives you to do better, which is way more motivating when you're doing it for other people than if you're doing it for yourself. Now, I don't know if it's because it's probably some part to do with ego, right? I don't want to look bad, right? Naturally, but there is something really fantastic about doing well for other people and having that feedback from them. I've had lots of really, really positive feedback over the years. Someone even mentioned recently that they thank me for their condo, right? So, things like that. It feels great to do that kind of stuff for people, right? And it drives you to be better and better because when you do inevitably go in a downturn, because obviously no one wins all the time, you start looking back and go, well, how can I make this better? Because it's not just for me, it's for other people as well. And I found it to be a incredible motivator to make me better and make my systems better over the years. It's been a bit of a gift in a way in terms of that because you really are highly motivated to keep it going and keep it working.
I mean, you also work on a lot of tools for helping you with trading. There's some technology aspects behind it too. Tell me a bit more about the things you've been able to develop and come up with to help with your trading.
Sure. I mean, like I said, in 2013, I fell down this rabbit hole of cycles and looking at repeating cycles. So I've certainly got a part of that. I still use traditional indicators. I've got an ATR. I've got I've got moving averages. I've got certain things of mathematical that are there. But I also like the idea of being able to predict a few days in advance or more. So we've sort of married both of those together. And that's something that I find incredibly fascinating because it's quite the sort of esoteric side of trading and predicting market turns, but as even looking at astro stuff. I mean, as J.P. Morgan said like 100 years ago, like millionaires don't use astrology, billionaires do, right? So there's definitely something there. Whether it's the main thing that's driving the markets, who knows? But certainly there's enough evidence that I've seen and that we've built into the software that we use and the systems we use that it can't be relied on 100%, but it's certainly a really good tool to see when there's a possible trend change.
So astrology per se won't necessarily give you like a setup or like a clear entry, but kind of just, I guess it gives you kind of like a theme, like a direction to go into. Is it kind of how you use it? And then you look at some more traditional tools to find out your entries?
Well, it's more about things like repeating cycles. Like there's lots of people built software that shows cycles, and you can see the sine waves, and you can see the ones that are maybe over dominant that are compared to others, and then you can create a composite of those. And that's some of the stuff that we've done internally, but they're not useful really on their own. You have to use other tools to confirm things. For me, it's more about can I have a list of dates in advance where I know there's a potential thing happening here, and that is about when that cycle happened in the past, and it's repeating again because there's a foundation for the study of cycles. I've been doing this since 1940, try to find markets, and a lot of that has to do with they focus on the financial markets, and that's work from a guy called Edward Dewey that started that foundation because he was hired by the President Hoover after the 1929 crash, because he was the unfortunate president that went through that crash from 23 to 33. That was his term. And they hired these guys to find out how can we make sure that doesn't happen again. And he spent his whole life looking at cycles and try to figure out, is there predictive cycles that constantly repeat? And nothing repeats exactly the same, but there's enough evidence to certainly kept him in that role for all those years, and other people have been fascinated by this too, so including me. So it's certainly one of our tools.
Super interesting. Something that most traders don't think about or don't use at all. But by the way, you also run a fund with these principles, and your fund is doing quite well. I was looking at your performance result not long ago, and I mean the performance is there for sure. So people can actually see that it's working, and it's interesting to think of it that way.
Yeah, I mean, it's a good tool, and it sort of keeps me motivated and fascinated by the idea that it's possible. Obviously, the best case scenario is 100% right, 100% of the time, right? I mean, who doesn't want that? But that's something that I'm about 70% right now. Right, and I like the high win rates. I think it's easier to trade systems that get a higher win rate, even though my original system was 50-50, and it did really well because it had a win. I had a 50-50 win rate, but the winners were 2.5 to 3 times the size of the losses, so that math works, right? But I like, even if I'm doing the winners are slightly higher than the losses, but if my win rate's higher, then I gravitate more towards that, because I find that easier for other people to follow, and also easier for me to stay disciplined to follow the system, because no one likes taking losses, even if you know your system works and it's only 50-50, right? And your winners are big compared to your small losses. It's still harder to trade that way, I think. So I like the idea of the forecasting as well as using tools to get that much higher win rate, and we're pushing and pushing and pushing to hopefully get to 80% or more. That's sort of what I'm trying to get to.
How often do you go back on reworking on those systems and the logic behind it? Do you want to find new ways all the time? Do you always test new ways to do it? Or do you kind of stick to it for a while and go back to work on it a little bit? Or how do you kind of balance it out?
Well, I mean, I pretty much do this full time, right? So I not pretty much. I do this full time. I think I'm always working on it, is what I'm trying to say. But when you are in a drawdown is when you really double down. You don't learn that much when things are going great. You learn everything when things are in a drawdown and things are not working for a little, short time. And that's when I've always looked to really double down on research. And as long as I looked for ways to fix whatever that was, and then make sure it doesn't impact the past results, or if it does, not that adversely. So it's always a balance of you when you're doing research and try to system build in terms of my opinion anyway, that you learn most when things are not going great, and that's when you have the nuggets. That's when you see things that are opportunities, not necessarily when things are going great, because you just when things are going great, you don't really want to fix it, right?
How do you handle drawdowns? Because it's one thing to have a drawdown on your own account, but then when you have a drawdown on a fund that everyone sees, I guess that brings, again, more pressure. But how do you sort this out? How do you recover?
I guess it's a belief in your system, right? It's constantly working on it, constantly back testing, constantly walking it forward, and things will happen, and there's things that will happen in the market that I've never seen before, even after 20 years of doing this. It'll happen again, I'm sure. I mean, like the thing in August with the Japanese carry trade, like that was unexpected, right? And there's been many things over the years that have been unexpected, and you can get caught in that stuff, and it just is what it is. So in terms of the pressure of when you see it drawn down for other accounts, it is challenging. There's no question. It's a very challenging thing. But you're either all in or you're not, right? And I'm all in for this. Ideally, I'd like to see my CTA grow to big dollars, right? I mean, we're pretty small right now, but I want to see it. 50 million, 100 million. That's sort of what I'm hoping to get to. And that takes a little bit of time. So that takes like 3 to 5 years of running a CTA to get institutions involved in it. And that's just a process you're going through. But if you're good enough, then the money will find you, right? And that's the as long as you're good and you know what you're doing, then it's all good. And that's why when it comes to like CTAs, people people that have got high net worth people or institutions, they want to see at least 3 years of track record professionally before they'll even look at you. No matter how good you are, no matter how good your returns are for the first year, second year, they want at least 3 years before they'll look to put in 5, 10, whatever million into your fund. So that's sort of the process you go through. But I don't fear trading for other people. I feel that I know what I'm doing, and even though things don't always go your way, you've got a great track record, and things turn around, and they will turn around. So I don't really fear that stuff as long as you know what you're doing.
Do you feel like there's a minimum kind of threshold of returns you have to reach to get people to invest in the fund, or with any kind of return they'll be happy with it?
Well, it's a really interesting world, the professional money management side compared to your retail side, and I sort of sit on both sides of the fence, right? I came from the retail side where I was doing signal services and doing that for a long time. So that's all retails, and they want like 50%, 100% a year. That's what they're looking for. Otherwise, they're not going to pay you, right? So that's what they want, and they'll take more risk for that. So they'll be. No one likes a drawdown, but 30%, 40%, sometimes even 50% if you're making triple digits plus per year. That's sort of where they'll be okay living. But the professional money management side has been a very different learning curve for me because they're looking for like 1% a month. Right, so I mean the unicorn for a CTA is a 20% return, max drawdown of 10%, and a margin to equity, which is 5%, which is basically cash on the index. You're not using any margin at all. That's the unicorn, so the institutions don't want to take a lot of risk. They don't want to see double-digit returns on a monthly basis. They just go, whoa, right? That's just too scary. So very slow and steady, which is very different to the retail world I came from, where and from my own personal trading, I want to make at least 50% a year. That's sort of what I tried to go for. Obviously, sometimes I do better than that, and sometimes I don't. So that's sort of where I like to live. But it's been a really interesting learning curve in terms of what the professional money management side looks for versus what your retail trader looking for.
If you had to start from scratch, would you go into the institutional kind of route, or would you prefer to, as a beginning trader, find ways to make money on a, I guess, easier scale?
I'm glad I took the journey I did because 10 years ago, even when I had a signal service, I don't think I was ready for like the professional money management side. I think it takes a long time, and a lot of CTAs don't make it. Because our hedge funds don't make it because people get into the idea that I could just run a hedge fund because I've got this great system, but you really have to be ready for that, not only emotionally and but from your system side. You really have to do this for quite a long time. I think at least 10 years before you should consider doing something like that. And that's just my opinion. Obviously, some people will trade for 2 years and then start a fund and do really, really well, right? And build a $1 billion fund, and that is absolutely possible. And that's one thing about this business is it doesn't matter if you've been doing it for 10 minutes or doing it for 20 years. The guy who's been doing it for 10 minutes might be better than the guy doing it for 20 years, right? So it's just one of those strange businesses that's sort of an equalizer. But I also think that there is a lot to be said about experience and going through a bear cycle or two to know what's out there and what can catch you out, and manage your risk better because you are more experienced. That's sort of my opinion.
Yes, so like something that you have to build over time to get to that level where you can actually manage a fund or a CTA.
Yeah, I think so, because you don't want to fail at this. If you fail at that, it's the thing about the professional records is it's there forever, right? Where you start something new over there, over here, it's going to follow you because you're registered, and everything registered is set in stone. So when you start you do a new disclosure doc for a new fund or whatever, your old system will be there, So you really have to be ready because you don't want to have that reputation come with you. You're not ready for it, right?
We have a book coming out. We're going to be in it. A book about platform trading and actually kind of how to manage a fund and your story behind it too, so people can check it out. But in the meantime, tell them where they can find you and connect with you to if they want to reach out to you or see more of what you're doing.
Sure. My website's comla.com. That's COMHLA. Comla is actually, I'm from Scotland, obviously, so Comla is actually Gaelic, Scottish Gaelic for together. So it's together.com basically, right? So they can find my details on there, and that's best way to reach me.
Awesome. We'll put a link below for that. We'll put the website there for sure. People can check you out directly there. I recommend they read the book when it comes out pretty soon. Should be in a few days from now. We'll keep you posted on that. People can leave a comment below as well. Comment below with any questions you have for John. And John, I really appreciate the advice you give to my listeners here. It's been a lot of fun. Hopefully we can catch up and touch again.
Thanks for having me.